Do you have a client who's looking to use a VA mortgage and you're not quite sure what to do? This is Ron Wysakarski with Real Estate in a Nutshell, and I've got some tips for VA financing that will help you and your customer. You see, what we have with the VA is actually pretty straightforward. The buyer has the ability to get a mortgage with no down payment. They've served in the military, and the two things they need are the DD-214 and their eligibility certificate. Beyond that, they need no down payment, and they can get assistance from the seller for closing costs up to 4% of the purchase price. So there's a lot of things that will benefit our veterans, and I'm very proud to be involved in many of these deals, and there's absolutely a way that we could work together with everyone involved in a transaction to make it smooth and successful. Now, a couple things to keep in mind: that there will need to be a WDO termite report done. So the property does need to qualify. So if there's wood rot or anything like that, that will be part of the VA repairs. So if you have a listing, maybe get in front of that to make it VA eligible. Although also looking like a 4-point: plumbing, heating, electrical, roof system, things like that. If you're on the buy side, let's make sure that we talk to our lender. Does the buyer have the ability to make a down payment if it helps out any of their qualifying, whether it's interest rate or just anything in general? Do they have enough money to pay for closing costs? Yes or no? If they do, then that will make their offer stronger in most cases. If they do not, then we need to frame the homes that we show to make sure that the sellers have enough equity to allow for those concessions and the desire to also do that. Now keep in mind that if you were to, let's say, artificially inflate that price and it's 4%, so if it's a $250,000 sale, that's up to 10 grand. So if the listing price is $250 and there's 4%, 10 grand coming out of that, that full price offer with 4% concessions is really $240, so it's 10 below. And that's what the seller is going to focus on, is the net. So $250, 4%, 10 grand, subtract it, $240 is the net to the seller. Now you can make the purchase price $260 and then do about 4%, maybe $10,000 to get to the $250 list price. There's a number of ways that you can do this, but the property does have to appraise. So if you're in a situation where you inflate that price to the $260 level, but the appraisal comes short, well, there's going to be some sort of a renegotiation. The buyer's going to say, hey, the home didn't appraise for $260. We need you to come down to, let's say it came in at $250. We need you to come down to $250 and give us the concessions. Of course, the seller's thinking, well, no. You know what? We inflated the price to help you because you didn't have enough money for the closing costs. So you've got some options. Let's suppose that you bumped it to $260, but the price and the appraisal comes in at $250. Well, you could just give up $10,000 in the deal if you're the seller and really motivated. You could say, look, it appraised at $250. You can still do the loan, but we're not paying your closing costs, or you can split the difference. Now, is it advisable? Well, not necessarily. And if you know your comps, chances are that you'll be able to structure a deal where it's still going to be in the window to get the appraisal to come in and allow for the concessions. But the property absolutely does have to appraise. So as a best practice for a buyer's agent, you need to make sure that your client absolutely needs the concessions. Only show them homes where the seller is willing to do concessions on that. And it's a quick call to the agent. Also, if you ask them, will the home pass a VA appraisal? Because that's important too. Most listing agents are not going to know 100% if it's going to work. So your client could very well pay for inspections, pay for an appraisal, and still not get the property. And they could be out, close to $1,000. What we can do is take a look at the seller's disclosure and find out, when was the roof replaced last, or how old is it? What about the AC? Is that recent? Is it less than 10 years? What about the plumbing and the electric? Does it have a new panel box or a super old one from the 60s? Because that might need to be replaced. And wouldn't we want to prepare the seller that we're going VA? And if we have a problem with the plumbing, heating, roof, electric, that's going to need to be addressed in order to pass the VA appraisal. If we start with the end in mind and make sure of these things, we stand a better chance of making it work. And if you're on the listing side of this, I wouldn't quickly dismiss a VA offer, because it's a great program. And we can help a veteran here, and I think that's a great cause. What we can do is talk to the lender. Get the pre-qual letter, review it, call the lender. Now, you can't ask for credit scores and how much money they have in the bank, but you can ask, hey, if you had a chance to review their 1003, which is loan officer speak for application. So 1003 is an application. They'll say, yeah, they submitted a full application. Great. Have they submitted their pay stubs, tax returns, and bank statements? That's just a yes or no. So great. Was there anything that caused concern because we have an offer from your client? Let them know. I'd like to get in front of this before we get way down the road and cost them $500 to $1,000 unnecessarily. Let's get in front of that now. Hey, do they absolutely have to have the closing costs if we come shy in the appraisal? Because this one's asking for 4%. And then the last thing we could ask is, hey, based on what you're seeing right now, do you feel that we're going to have any problem with the DTI, which is debt to income ratio? Really, it's just a clever way of asking, can they afford the property? Because their income compared to what the mortgage payment's going to be creates the debt to income ratio. So being a former loan officer, I'm very familiar with this. And I think too often we dismiss FHA and VA simply because they're FHA and VA. So let's think about it before we move too quickly on this. It could be a great opportunity for both the buyer and the seller to come together on a sale that involves VA financing. This is Ron Wojciechowski for Real Estate in a Nutshell. If you like what you're hearing, click or comment below and of course subscribe. We'll see you in the streets.